Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Chuck Fuller, Portfolio Manager at Nasdaq Dorsey Wright, Sara, Mehle, Senior Index Research Strategist at Nasdaq Global Indexes, as well as Josh Joffe, Managing Director and Head of Investments at Revolve Wealth Partners. We're here to discuss asset class rankings, sector performance, and month-over-month leadership. It is great to see all of you again. Welcome back to Trade Talks. And Josh, let's kick it off with you. We got the rate cut. We got 50 basis point rate cut, which apparently the market is digesting as a good thing. It's really interesting to see the reaction that we had post rate cut, selling off at the end of the day, and where we are now with the indexes, hitting all-time highs.
Yeah, Jill, and thanks for having me back. And I was actually in the airport yesterday when they announced the cuts. So I'm catching up on some of the news, but I saw that initial reaction and stocks seemed to be a bit uncertain. But, here we are today, pretty much flirting with or piercing all-time highs in the major indices, and markets seem to be liking it. Definitely caught some folks off guard, right? The expectation up until this past week was for 25 basis points. Most economists were kind of caught off guard as well. First rate cut since 2020, first surprise rate cut since 2009. But, I think the important thing, and Powell actually alluded to it, we're cutting rates and we're easing into what is already a strong economy. Those were his exact words, an already strong economy. So a lot to like here, and I think a lot to be constructive about.
Yeah. And Josh, I wonder if doing the 50 basis point rate cut now kind of takes the pressure off the Fed from having to do it day after the election. So there's no perception of perhaps it's politically motivated or it's more of a wait and see attitude. It almost seems as if they got it out of the way and now they have some time, as Powell articulated, to let this work through the system a bit.
Yeah, I think that's a great point. And, the Fed dot plots are signaling another 25 basis point cut, or rather two 25 basis point cuts. I think the market is expecting more like 75 bips between now and year end. But I think to some extent, these are normalization cuts. I think you're right. Get it out of the way now, preempt what may be a worsening conditions. Also, this may be a little bit of a makeup for July. The Fed got a lot of flack for not cutting rates back then. They've been accused of being behind the curve over and over again. So perhaps this was a bit more of a bold move in response to that.
Well, it's interesting when you say that they're behind the curve, and really that has been the narrative. Well, when they initiated rate cuts to where the market is now, I mean, look at the performance. It's almost one of those instances where fighting the Fed might have been the strategy, right? So let's take a look at some of the technical factors here. And Chuck, you had noted that equities are still the number one asset class. And if this trend is broken, it will be a triple top. What's the significance of that?
Yeah, it's just we've basically hit this level around 5650 on the S&P, kind of for the third time now, and obviously we pierced it easily today, with the indices up around 5730. So obviously that's a good sign. We're at all-time highs on the S&P. We haven't seen the same all-time highs everywhere. Actually, if you look at the Qs, we haven't quite gotten back there yet. And some of the more prominent sectors like technology haven't quite recovered all the way, but it certainly is a good sign to see the overall market getting up there. And I think maybe what's even better news is that I think a lot of people, anytime the market hits all-time highs, you're automatically wondering, is this the top, right? Does it have any room left to go? And at least from a technical perspective, we don't see it as being overbought here. Actually, to become overbought, we need to see the S&P get up to actually pretty close to 6,000, around like 5960 or so. So I think it has some room to run if it wants to. And also, market breadth has been very good of late too. And that's a key thing. We've seen, really if you look at measure of breadth, like the 80 line, it hit new all-time highs about a month ago. So what that means is that you have a lot of stocks under the surface that have been moving up. It hasn't just been the names at the top like we're used to, the Nvidias, the Amazons, and Microsofts of the world. A lot of the other stocks are starting to move up as well.
Yeah. And Sara, let's take a look at this through the point and figure signals that you take a look at. It appears that, there was a signal change month over month. Does that happen quicker than it perhaps does in the past? It feels as if trends are moving within sessions or days relative to what we would perceive, weeks or months would be more normal.
Yeah, so there's a lot of action taking place right now on the point and figure chart of the Nasdaq 100 index. And, these charts are designed to really cut out the noise and only chart when needed. And so sometimes we will see slower development over time, but sometimes in periods like this, we will see some action. So, we did see the chart flip positive, back in August 15th. And today, with today's action, we saw the chart return to a point and figure buy signal at 19,700 before rallying to 19,900. So we're up against resistance right now at that 19,900 level. It's a spread triple top here. If we were to break through that, that would be a positive sign. And then the next level of overhead resistance is at 20,600, and that's at all-time high from July 10th. So overall, we are in a strong uptrend with that positive trend again that flipped positive about a month ago. We do have support now at 18,500. That was the last time that we pulled back in September. But today's move again returned the chart to a buy signal, which is a positive sign. And as Chuck mentioned, we're not too overbought. We're about 23% overbought now based on the 10-week trading band, which is a completely normal move, and that does factor in today's 3% rally.
Yeah. And Josh, it feels as if the market has got everything it's wanted. It got the 50 basis point rate cut. You're seeing that sector rotation. You're seeing breadth broaden out, and we're at all-time highs. It just seems like it's the gift that won't stop giving. And it makes you wonder, how much longer, can this last? Or in other words, for the remainder of the year, certainly through the election, what are some of the potential volatility events that you're going to be looking for that could present a risk to where we are today?
Yeah, well, certainly the election's going to, bring with it a lot of uncertainty. And I think that we likely will see more volatility between now and then. Seasonality, September historically just being a weaker month. We saw that a bit at the beginning of the month. Obviously, now we've seen the market strengthen considerably. But I don't think it's necessarily an all clear signal, at least in the short term. But to Chuck's point, all-time highs tend to be bullish. I think we underestimate just how often the market spends time at all-time highs. They usually beget more all-time highs. Obviously we have corrections along the way, but that's not a reason to be bearish. And to the contrary, it's actually quite bullish. One thing we've been talking about amongst our clients is just, this notion that secular bull markets can actually last a lot longer than we think. We look back to 1980, we look back to prior periods. They extended a lot further. They went a lot farther than what we've seen so far. So if you're of the mindset that we are within a secular bull, and I think there's a lot of evidence to point to that, reason to think that it could extend quite a bit further.
Yeah. And, I always find Q4 interesting, particularly this year, because just the moves that were made in certain areas within the Nasdaq 100, certainly the technology space, there are some PMs in Q4 that are going to have to play some catch up here. So, that could be another subtle underlying reason to continue to put money to work in stocks. Then you have to remember too, with rates coming down, of course, that impacts savings rates. The other narrative has been there's so much cash on the sidelines, right? So it's going to have to go somewhere to exhibit returns.
Yeah, no, absolutely. 6 trillion, 9 trillion in money market funds, and that's going to need to find a new home. And I think we're going to see that, and that should also be supportive of prices between now and year end.
Yeah. And Chuck, when we look at breadth broadening out, where are you seeing that sector rotation?
Yeah, so, for the longest time, technology was at number one in our rankings. Here just in the last month or two, we've seen kind of a switch here. Technology is still ranked very high. It's at number three. But we've seen financials come on, and they're actually at number one. And they're really at number one with a decent amount of space between number one and number two, which is industrial. So, we're looking there. We've seen real estate kind of move up a ton with, obviously in anticipation of these rate cuts. They're probably the best sector over the last, at least couple months. They're still, towards the bottom of our rankings with how bad they were performing before. But I think that they're one to look out for going forward.
Right. And Sara, let's take a deeper dive into the indexes here. First, what was the top performing index? And secondly, if we could dive deeper into technology, what subsectors exhibited some weakness?
So this is just looking back at month to date. So going back to the end of August. So the top performing index so far this month is the KBW Premium Yield Equity REIT. Index up about 4.6%. Within broader tech, we've seen weakness in semiconductors. So the Nasdaq US Smart Semiconductor Index is down about 6%, while the Phillips Semiconductor Index is down about 5.8 since the start of the month. On the other side of that, the flip side of the coin, we've seen strength in video games. So the Nasdaq CTA Global Video Games and Esports Index up about 3%. And also strength in Nasdaq CTA Global Digital Health up 3%. So it looks like there's some dispersion within the broader technology sector, but I thought it was interesting to see some of the global video games indexes up there at the top, along with digital health and weakness in semis. But, with this rally that we've seen today and with yesterday's announcement, we'll see, how that changes the action within the broader tech sector.
All right. And Chuck, to wrap up here, anything that you can discern from what's happening with fixed income and commodities?
Yeah, I mean, so fixed income, they're still at the bottom of our rankings, but obviously starting to get better as, yields have fallen pretty significantly, even in the last month. There's been a huge move down in yields, which has boosted prices. Bond volatility also seems like it's fallen back to at least a somewhat more normal level, which is going to be good. And we've seen kind of spreads, which had kind of spiked a little bit last month in the equity sell-off. They kind of come back to normal. So I think we're starting to see a more normalized fixed income market, which is obviously not what we've had over most of the last, 2 or 3 years. And that's got to be better for everybody.
All right. Appreciate everyone's insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.